Welcome back to the channel, everyone. On today's video, I'm going to reveal for the first time ever my entire dividend portfolio. It consists of both US and Canadian equities, and we're going to go over my individual holding percentages in each company as well. First off, we have Visa. This is, in my opinion, a technology company. It is debatable for some. It's pretty clear for me, though. And currently, it's 2.5% of my overall portfolio. Next up is Vici Properties. Some of you might not be familiar with this REIT. You should check it out. If not, it owns the properties in Las Vegas, which they lease out to casinos. It's a very unique REIT, and yeah, I really like it. It increases the dividend a lot every year, and it's just a really high yielder that's sustainable in my opinion. Next up is one of my few healthcare companies, and that's United Health Group. This thing is constantly overpriced, but for a good reason. It's a very unique company in the healthcare service industry, and they raise their dividend very high every year, although it is a pretty low yielder currently. Toronto Dominion Bank is 7.6% of my portfolio. It's a rather large holding of mine, and for good reason. I have a lot of belief in this bank. I think it is poised for the most growth in Canada because of its American exposure. And I just like management. I like that they announced that they're doing a huge buyback, and it is a pretty healthy yielder as well. TMX Group Limited makes up 2.3% of my portfolio. It is technically listed under financials. However, much like the S&P company, this is a tech company in my opinion because it is a service company based in their technologies. They own the indexes like the TSX Venture. It's a really interesting company if you guys haven't heard of it. It has outperformed the actual Toronto Exchange Index for a long time, and for good reason. It's a really interesting company. Take a look at that one if you guys haven't checked it out before. Next up, we have my favorite telecommunication company in the country, which is Canada, and that is TELUS. It is a pretty high yielding company, north of 6% right now. Lots of debt, but revenue keeps going up year over year. This is one that I do happen to really like, especially at the price that it's trading at right now. Next up, we have Starbucks, representing 1.5% of my dividend portfolio. I bought this when it went on a dip around the low $70 mark about a year and a half ago, I believe. This is one I bought and have not looked back. They do have a substantial amount of debt, to be honest with you, but you know, if you're going to spend $8 on a cup of coffee, this company is going to do well in the future, and the numbers reiterate that. Next up, I want to talk about S&P Global. It represents 5.3% of my portfolio. This is the largest US-based holding I have. It is a technology company. You can debate that. You can call it a financial if you want. I don't believe that's correct. And it's just for good reason. Just look into the company, and the more you look into it, you'll agree that it is a tech company. This is one that I really like going forward. I own more of this than I do Apple, and I love Apple. So I have high hopes for this company, even though it does trade at a very high multiple. We have Royal Bank representing 6.6% of my portfolio. This is my second favorite bank in Canada and in the world. It is the biggest company in the country, and I just don't think it has the same growth metrics as TD, but this is the safe bet. This is one that everybody likes. There's no reason not to if you look at the numbers. Pepsi represents 2.2% of my portfolio. It is maybe the only U.S. listed stock that I'm actually down on at the moment, but I do really like this company. It's a lot better than Coke in my opinion. It doesn't have the same margins, but it has better growth prospects, and I like their snack segment. Microsoft now represents 3.6% of my portfolio because it just keeps going up and to the right. I don't need to talk about this one too much. You guys know about the AI chips that just came out, and just their cloud stuff. It's out of hand. It's out of hand how good this company has been doing, and I don't think it's going to stop. Now, McDonald's represents 2.5% of my portfolio. This one is, I'm not going to say it's overvalued. It is richly valued, and I'm barely up on this one. You know what? I love this company. It seems like a boring, old, traditional business, but when you look at these numbers, I know that this company has staying power. I know that it has adaptability. I know that they buy back shares, and I know that they raise the dividend. So this isn't one I'm going to be selling. I've got a smaller position in Lockheed Martin when it went down on a dip into the low 400s recently. I think I'm up around 8% on that one in about no time, which is nice. This is a good defense company that trades at a very low PE multiple, so there is room for expansion in my opinion. It's not a huge position, obviously at 1.3%, but I do like it. I do like its future prospects. Home Depot is a really exciting company for me. Home Depot and Costco are my favorite retailers. I don't think anything else even comes close. It represents 2.2% of my portfolio currently, but I am kind of looking to add. I don't have any capital sitting around right now, but that's one that I would be adding on. I really do like that. After that, we have Hershey at 1.1% of my portfolio. This is a boring company that makes more money every year and buys back shares. I don't expect this company to do too much. Just if it continues doing what it's doing, then that's okay with me. And I like Hershey's, and I'm sure many of you like their products. Couche-Tard. This is one that has skyrocketed up for me. Yet again, it's a small position. This isn't, I don't know. It is an acquisition-based company. It's just not my idea of an exciting business with their traditional gasoline dependency. But anyways, they have a lot of good things going for them. That's why I own them. So it's 1.3% of my portfolio. Next up, Apple, coming in at 4% of my portfolio. The buyback king, constant dividend raiser, product innovator. I love this company. If it goes down on a dip, I will be purchasing more of that as well. I just need more money, guys. But this is one is on my list to buy more of as well. BlackRock, my only U.S. financial stock at 1.4%. This one is a compounder. A lot of wealth service companies are not. This one is. That's why I bought it. That's why I love it. They got their Bitcoin ETFs coming out soon, and it just has a lot of good things going for it. Next up is BAM, Brookfield Asset Management, representing 5.2% of my portfolio. This one should be a very high dividend raiser. That's what management has kind of told us. We'll see if they live up to our expectations going forward, though. They need to actually raise the dividend. They haven't had a chance yet. It's once a year, and that'll be coming up early 2024. In the same Brookfield family, I have infrastructure and renewable at 5.1 and 5.2% of my portfolio. There's not too much to say about these boring utilities. I've talked about them separately in other videos. I think they're a good value, and I like them. Next up, we have Canadian National Railway. You can see that I have a lot of conviction in this company because it's 7.5% of my portfolio. This one I thought was a particularly good deal in the 140s. We're up in the mid to high 150s right now. That's a no-brainer. I'm going to just keep adding more yet again once I have some free cash on the Canadian side. That's one that I will be adding to. KPC, here we go, 2.3% of my portfolio. It's hard to value this company right now because it just did that massive acquisition. We need to see management deliver on some promises, but I mean, it could be undervalued, it could be overvalued. It's kind of hard to tell. I bought in on this just over $100, 103 maybe, so I'm down a couple bucks on it. Currently, the last quarter that came out, it didn't tell us too much, to be honest with you, but things weren't great. We'll see if they're going to be buying back shares or paying down debt. There is a lot of debt because of that acquisition. Now you'll see here that I have 16.5% of my portfolio currently in cash. That's just money that I have set aside in case things dip significantly again. And that's making 5.5% interest over at Tangerine currently right now. So that's enough for me to leave a little bit on the side. And lastly, I have CCL Industries at 1.2%. This one's been beaten up until super recently. It's just been skyrocketing. I think management jumped in and bought some shares. Now, we went over all my individual holdings. Quickly, I'm just going to go over my sector allocation. You guys can let me know what you think about that. Currently, it's just over 10% utilities. That's a little bit high for me. I've been thinking about cutting that down a bit, to be frank with you, because while utilities have been getting hammered, they just don't have the growth prospects of some of the other sectors. Next up, we got telecom, and that's all TELUS, 5.8%. I don't really want Bell at the mid 50s. I'm gonna take a look at it if it gets hammered down again, though. My technology pies at 18.3%. That's good. I want to get that a little bit higher into like the 25% range, maybe even 30 if things go on sale. That's where the growth is, and I like that type of thing. Materials, that's my CCL.B there at 1.3%. Industrials, 12.1 with all those railroads and Lockheed Martin. Healthcare, very tiny at 1.4%. Cash, 17. You know what? It says 16 up here. I'm going to take a look. There's a slight discrepancy, but it's off by 0.6. I better figure that out later. Consumer discretionary at 6.5. Consumer staple at 5.5. And financials at 21. Now, 21% in financials is also a little high. I think I could cut that back. So financials and utilities, I kind of want to cut from and throw that over to the technology side. That would make me a little bit happier. I kind of like this low consumer number on both sides. These aren't super high growth. These are steady Eddie spots here. So that's my breakdown. That's my total dividend portfolio. Let me know what you guys think and how it compares to your portfolio. And we'll see you in the next video. Thanks so much for watching.